and welcome to the Core 4 Show. I'm Coach Brandon Adams. I'm here to bring you another week of our journey in what's called how do we make money? How do we change our lives? How do we change the direction that we're heading? Or if we're on the right direction, how do we add to it? How do we ensure that we're going to be as successful as we possibly can be? And this journey is not an easy journey because there's always scams out there and people that are trying to basically take our dollars or give us opportunities that really aren't real. And so our goal here at Core 4 is to help you to understand what the mindset is. There's an opportunity that I'm going to talk a little bit about today. And it's interesting because what happens is that people are so disenchanted, right? It's like, oh my gosh, here it comes again. Here's another opportunity. It's not for me. Every time I join something, I hope he's listening. Every time I join something, it goes away and all the rest of the stuff. Well, that's why we believe in self-custody. That's why we believe in education. So having the right mindset and giving things an opportunity, if you just quit this journey of yours to change your financial future and change your lifestyle, then it's over. So you just are going to work for a living. And so that's the 9 to 5. Our goal is to change the 9 to 5 experience for you so that you're actually able to make some real money and free up your time. And then investments, there's active and there's passive. And so we here at Core 4, we actually test things out. So we're trying to figure out what's going to work, what's the best this, what's the best that, whatever that might be, we're going to figure it out for you. And so the goal is that over time, you're then going to position yourself so that retirement becomes possible. And so we have different vehicles for that. And so one of those vehicles is insurance. And so in insurance, we've looked at it as a death benefit, but the reality is it can be a wonderful investment tool. So our goal here at Core 4 is to help you with those 4 things: mindset, 9 to 5, investments, active and passive, and then obviously retirement. And so over time, you're going to learn about different things that we're trying out, different things that we're on our journey looking for, because we're not financial advisors, but what we are is a group of individuals that are concerned about our own lives and our own futures, and we're not giving up. And so if that's you and you want to join this team, we have a heck of a team. Typically, we would have Eric Majors, who's not here today, but we do have Chris Bulber, who is always here with us, and we do have James Bishop, who is always here. And we're here to show and share with you how we analyze the market, how we analyze the centralized markets, how we analyze the decentralized markets. Eric works with yield farming. Chris is amazing with Forex and futures and more, and James is with more as well, with insurance, and then also with futures and just every old thing. So the idea is that we are a resource for you. And so in this journey, we have 2 bots that we've been working with now. So the first bot is the Core 4 bot. Core 4 bot's been doing between 17 to 25% a year. That's a very good deal. It's automated and excuse me, it's been back tested and so much more. And the second thing that we offer is the Kong bot. And the Kong bot just last week jumped up 16%. So it had dropped down 7%, jumped up 16%. And so that's a great experience that you guys can get. So, but guess what? We're keeping self-custody of our funds. So we have it with our broker. We can decide what to do with it, when to do with it. And so that's just a different experience for us. What Eric talks about is his course, and his course is in yield farming. And yield farming is very interesting because what yield farming does is it allows for you to basically be the bank. And so you're allowing 2 crypto pairs, and you put them together. And so then as people start to do transactions between those 2 pairs, because you provided liquidity, you now are getting a percentage of the fees. And so there's an automated version to this. And so that took away, in the beginning, we had it as a very active kind of experience, and now it's passive. Great job, Eric. And so we also have some other projects. We have a case study, Miracle Cash and More. And we also have another case study called Get Fit Mining, which is going to change to MoveQuest token. So MoveQuest is a little different. You guys haven't heard me talk about it, so I'm just mentioning it to you now. And basically, you're mining as you provide activity to their ecosystem. And so as you learn what that utility is and how it works, it may be for you. It is for us, and so we love every minute of it. So anyway, without further ado, I'm going to bring on Chris and James. Let me do that now. Chris James, what's up?
How's it going?
Happy Sunday.
Happy Sunday. So I just have to mention this because I know that you guys are not. Tuesday. Do we all know what's happening Tuesday night?
No clue.
See? Look at you, Chris. Look at you.
Tuesday night, no. I'm like
Tuesday
Wednesday morning CPI, dude.
Come on, man. Tuesday. Taco Tuesday. No, I'm joking. Isn't that the debate?
Yeah, 8
But
o'clock.
that's other things that I don't care about.
I saw that the gym.
I knew.
Yeah, it's nothing's important until November 5th.
Yeah.
I knew, but aren't you guys, for entertainment purposes only, going to be watching?
I'm going to watch the futures market, see if there's any jumps. That's it. Like, if there's anything that triggers the market, I'll watch that. But, like, I don't want to listen to that garbage.
Yeah,
there's nothing valuable they can say.
I've never seen people react in the market to a debate,
True.
per se, because it means it's like it's not as useful as wet toilet paper. You know,
that's
I hate to say it like that.
Very useful, buddy.
You know, wet toilet paper. Still full of shit. That's all right. I'm gonna curse on your show. We need a beat button.
Baby wipe. Like my little baby wipes. I love those things. Without them. You know?
Stronger than the arguments those two will be making against each other.
So the goal, guys, is really, now that we're talking about the politics behind this, and you're basically saying that it doesn't really matter what's happening, you know, with the debate. It's not going to push the market. So when Biden really, you know, really was honest, and he showcased that he is beyond his time, did that impact the market at all? That last debate?
Not really.
No.
It
just showed one guy's crazy old and one guy's a crazy liar.
Whoa! I like your politics already. You know, I'm gonna tell you.
You can fill in the blanks with who is who, but you know, that's pretty much what it boils down
to. The thing that got me heated for it was when they started arguing about who's the better golfer.
Oh my God, I know. I know.
And then Biden said, "You want to play 18 holes and carry your own bag?"
Right. Like Biden's gonna be the guy better suited for that.
Exactly. Oh
man.
Stupid,
you know, when you think about this, you know, it's still hard. I know we're going to get back on the topic of the show, but you know, it's hard for me to understand how Americans accept some of the bold-faced, fact-based lies that are told, and you just accept it and you just keep moving with it. You know, this is the apathy that drives me for what we do, because when people really don't have a vision for their future and they don't want to think about it, they just say, "Oh, I'll just take this here." You're not really minding your own business. Like, this country could be in jeopardy of God knows what. You know, what are we planning to do about it? Are we just going to sit back and accept it, or are we going to actually act? And so, you know, that takes us to the market topics. I mean, we weren't on last week because did you guys have a good Labor Day?
Did have a good Labor Day. It was probably much needed, to be honest.
Yeah, I was just resting up. I had a.
How's your toe, bro?
Yeah, exactly. I had a small toe surgery. It was pretty. I won't get into details.
Don't get into details because you did offline.
And it was just resting and not walking as little as possible.
That's all right. Chris and I kick it with you later once that toe is better. We can't kick it now.
For sure.
Kicking nothing.
Exactly.
So, all right. Well, let's talk a little bit about the market. You know, Chris, you know, you have a wonderful perspective here, and so I see a lot of red here. What does that mean? What's going on over here?
This is all high impact news for the week. So when you asked about Tuesday, you're right. There is the Tuesday debate. Like I said, I'll check into the futures market. I might tune in, but I honestly try to listen to Biden Trump, and I was on the ride home for 45 minutes and I couldn't take more than 5 minutes of it. So that's probably going to be the same thing this time around. So anyway, the real news that's going to happen this week is going to be Wednesday, Thursday. We have CPI for the US and we have PPI for the US. We also have a rate cut expected to be a pretty big rate cut out of the European Central Bank. They have been, they sat at 4.5 for a while. They finally started to cut. They got to 25 basis points lower, and this is a 0.6% forecast to cut. I do think this is really interesting for a couple of reasons. Number one, the dollar's been beat up really badly for the last couple of months, and the dollar's kind of at this critical support level at 101 to 100.50. So here's the dollar index for a moment. I do think this is pretty strong support at this level. I think this is a pretty good opportunity for traders to be looking long on dollar crosses, tighten the stop losses up. And then if there's just chop in here, the dollar just returns kind of the halfway point, maybe comes back up and we have a range on the dollar. I look, this is my kind of outlook. We are off to a pretty rough start for September, which is perfect seasonality. And what's funny is the historical average is only 1% lower for September. And so here we are 4.5% down, 5.5% down in the first, 3-4 days of trading, Tuesday to Friday. It was a big Tuesday directional day in the SPY and then a big Friday directional day in the SPY. And the market's down, 4.5%, 5% just in the week from this recent high, which was August 30th. There's our 4.17%. And look, the reality is this market can go down another 8 to 10% and then rip all the way back up 7, 8, 9% and still finish right around the historical average of down about 1% for the month. But volatility is probably going to be pretty high. I do wonder, and James could probably speak more to this, the employment numbers have been really, really terrible for the U.S. The one thing I want to bring up tonight is I listened to an interesting podcast this weekend. So we disinverted for the first time in 2 years. So 2022 was when we inverted on the yield curve on the 10 and the 2 year, and we just disinverted last week for the first time. Now, I want to zoom in for a moment because historically speaking, it's not necessarily when you go into the inversion that's the problem. It's when you come out of it. That usually coincides with pretty terrible times in the market. So go ahead.
I was just going to say to your point, the people get the phrase confused a lot. It is not, and it's the full sentence is as inverted yield curve precedes a recession. Yes. It's not that it happens during.
It's like the canary in the coal mine for an oncoming recession. It usually takes about 2 to 3 years on average to say that, and that's like a very generous window to give an inverted yield curve to be somewhere between 2 and 3 years from now on average. Maybe it's longer, maybe it's shorter. We'll probably have a recession, and it's that doesn't help anybody do anything. But the disinversion is typically when things get a little bit more problematic because that tends to time the incoming recession a little bit closer. But I also thought was interesting is back in history, the inverted yield curve has typically corresponded with a tighter labor market, and the disinversion has corresponded with a looser and softening labor market. And that's what we've been seeing the last month is employment numbers since July have been pretty rough through August. August fits bottom in the nasty move we had with Volmageddon 2.0. All that stuff happened in the last 4 weeks. So the market's digesting this potential threat of the employment numbers are looking pretty terrible. We had non-farm payroll last week, which is another big miss. We had the JOLTS job opening with a big miss. Unemployment claims steady. It was just bad all the way around. But James, I want to hear your feedback on this. If we are going to see more upside in the stock market, and James has said before, we'll probably have a Main Street recession, but a Wall Street expansion, or maybe the final couple innings of the Wall Street expansion. One thing we can watch for on this chart right here, this is the 10 and the 2. If this actually inverts once again, that does give the market an opportunity to go higher. So I will be watching over the next couple of weeks with this inflation news this week, with the Fed on September 18th, and going into the election. If this thing sits here and jostles around this, 0 point or this parity point, there's a chance that it stays inverted, and that gives the market a little bit of sigh of relief, as opposed to going and continuing to disinvert, and all of a sudden that just shows that the labor market is getting worse and worse, because historically there's a really tight correlation there.
I 100% agree. I think the biggest, in my opinion, though, the biggest thing to watch is what's going to happen with the central bank rates, because that's what businesses leverage debt in order to make investments. And the only way you can become profitable as a business is either A, you cut staff, B, you make cheaper products, or C, you borrow at a really low cost, invest, and then get a higher return. And if you think about it, CEO pay is being tied to share price, right? They they have to do anything they possibly can to, one, never lower a dividend. That's a kiss of death for a stock.
Yep.
Two, become profitable at generally most all costs. Like we're seeing it. You're seeing exactly what profit can do to a company when you tie the CEO pay to the share price with Boeing. Right, a few years ago, Boeing was bought by private equity firms, and then they had to sell it, and another company bought it, and they're trying to cut corners. And you got engines breaking apart from airplane wings. That's not a good thing if you want to make it across the Atlantic or the Pacific. Generally, the whole plane has to come there together. Otherwise, you can't get there in pieces. And we're seeing it there. We're seeing it in many, many different companies just, having to cut labor because that's the most immediate impact. Well, if borrowing costs go down, now they have to refinance their debt. Then they can begin to borrow more, and then we'll see a hiring impact. And that's why I think that inversion of the yield curve, and what you're saying there, Chris, with the bouncing in between, that could signal to Wall Street that, hey, okay, we got a little time here. Let's figure out what we're going to do.
Yeah.
I think also, to me, that's the biggest one. And we talked about this 2 weeks ago with the unemployment rate, that revision that, I don't think I didn't explain it properly, but that revision that the Fed came out of with Jackson Hole, we literally lost all gains in unemployment rate for 2024.
Yeah.
In one announcement. That was just
that the March revision?
Yeah.
818,000?
Yeah, it was 868,000. Yep.
Yeah.
And we lost nearly all the gains for the entire year. And so we went from 3.2 to 4.2 just overnight. And then, of course, when non-farm comes out and, the traders got ate up in it. And it just what it was what it was.
So are we going to see a rate cut, you think?
I think we will, but here's the thing. I know a lot of the market thinks that it's going to be 0.5%. I think the CME is saying
that's a terrible trigger if they do it.
It is. I don't think they will do 0.5%, and here's why. If they want
to preserve any optimism moving forward, historically a 50 basis points cut has yielded terrible results in the markets because it completely shows the Fed is wrong about what they did the entire time with monetary policy.
Yep. So not only that is. Here's the thing. If you cut rates too fast and then inflation begins to explode again, well, now you have to raise rates and you don't want to backpedal.
Correct.
But if you dip your toe in the water, then then nothing changes. You can say, okay, we can test it again. Nothing changes. Okay, we can go a little bit larger. Just how they rose. I mean, Jerome Powell said it himself in the press conference a few months ago. He said, we're looking at, a smaller cut, larger cut, just like they rose rates. When they rose rates, they rose 25%, then 75%, right? They didn't, and then they rose at a 50%. And that was to get back to, that normal level. I think we'll end up cutting down to probably that 4% level. And I think we live between 2 and 3.5 to 2 and 4 for as long as he possibly can.
What's considered restrictive is if the Fed funds rate is above the core PCE or the Fed's like target inflation print is PCE. Right now, I think it printed 2.6. Yep. And so we're at 5.25, 5.5, and PCE is at 2.6. That difference right there is the restrictive nature of monetary policy. So there's buffer for us to drop. And this is what's interesting. This all changed last week, by the way. Now you can go out in the Fed Watch tool out to December of 2025. Now the Fed and their dot plot has only projected maybe 100 to 150 basis points of cuts. The market is more like you clowns are cutting, 250 basis points by December of next year. So the market is anticipating a much more dovish Fed. And again, think about that PCE rate, 2.6 right now. And this is December of 2025. We're looking at 2.75 to 3% is like the highest probability with what the market's anticipating the Fed to be at next year.
Yep. So this is at a macro level. So let's drop it down to a micro level.
Yeah.
So the individual that's looking at us and saying, hey, all right, I get all this stuff with, the prices and all the rest. How do I make money off of this? If you go back to that original one, that might be it right there. Is that what you showed earlier?
Originally, it was this. I did the
No,
10 and
no,
the
no,
2
no,
year, but this
no.
chart.
Yeah, that chart, right?
Yeah. Yeah.
So when was that where it was the yellow and it broke out of the yellow right there?
That was the end of August. So we started to hit this indecision like the latter part of August. We had like 9 days of indecision. August 30th, we pumped up all the way to those fresh highs, but not enough to clip the all-time highs. And then we went into Labor Day weekend, and the day after Labor Day on Tuesday, the market just dumped. And that was pretty much cementing like September effect is here, and that put the market right in its heels. And there was just good follow through from there for that. Tuesday or Wednesday, Thursday was nothing. Then Friday, another big directional day. But Friday was non-farm payroll, and it was a whiff across the board, and all the employment data sucked last week for the U.S. So, like I said, this is an easy chart to say. So, I think the market just digested crappy employment news for the U.S. We have inflation data this week. The reality is the inflation numbers are going to be better because you can see here this week we're forecasting a 2.6% year over year inflation, the CPI print on Wednesday. We had a previous at 2.9. We're forecasting a 2.6. Look, the slowdown is being felt right now, and seeing inflation actually drop that much lower, that's one of the bigger chunks that we'd be seeing in a while. If I go to inflation data here, take a look at the CPI year over year. If this pops up and gives me the bar charts that I want to, this is perfect. So what we have seen is a pretty sticky inflation reading since basically summer of last year, and we've just gone barely lower, and we've been pretty steady for the last like 12 months. So if we actually print 2.6, let me put a line here. 2.6 is going to be right here.
Mm-hmm.
And that'd be the first time that we might see a histogram if I just draw a box. It's going to be the first time we actually see like a decent chunk right there. And it looks like, okay, well, now maybe people looking at, just trend analysis is like, okay, now we're starting to trend a little bit lower. And the market might be a little bit optimistic about that because it's going to further cement what the market's already anticipating, which is a rate cut by the Fed. And to James and my point, 25 basis points would be the smart thing for the Fed to do because it shows that, look, we're still doing what we said we were going to do.
Right.
It's time to cut. It's appropriate to cut, but we didn't miscalculate. Everything's working according to our dot plot and our plan and our consensus. And I think they're in a very difficult spot where they have to finesse all this crap going on. Where it's like there's like the brink of some downturn. There's a brink of I mean, again, it can be like tons of bear porn and tons of negative crap out there. But the reality is, if you want to care about the next 5 or 10 years, just buy it and stop worrying about it. Nobody cares about the next 5 or 10 years outside of the market's going to find a way to go higher, more than likely. But for the next, 500 points or 1,000 points here and there, I mean, this is a really simple chart. We have turned down on my S&P. If we look at some really simple industry standard indicators, we have turned over on the MACD. We're getting histograms to confirm that. We still have room to get down to oversold conditions, which probably just brings us back in to the overstretched long time test of the 200 exponential moving average. That's all I see right now. So why do I say all this happens? Because we had this correction back up and we couldn't break the highs. We might not be able to break the lows, but we just test the 200 EMA. We maybe test the August 5th low, but to me, that's a buying opportunity in the short term. And all
Absolutely.
this makes sense to me because technically it's right there, but also we get through employment, we get through inflation, we get through the Fed, and then it's about the election. And the market might not give a crap about anything until what's next because
Yep.
employment numbers are being digested, inflation numbers are going to be digested, and then it's about the Fed. And for once all that stuff is in the market, buy the rumor, sell the news. I don't think the market has enough evidence to crash, and it doesn't have enough evidence to rip. Not yet. And that's where the election is going to be the next big catalyst, in my opinion. So
Yeah.
I'm prepared for just chop, and I'm looking forward to it because it's easy to make money and it's easy to make income in a choppy environment.
So it sounds like if you jump over here where it hits that 200,
Yep.
that's a buying opportunity all day long.
To me, it absolutely is. Yep.
Right now, you wouldn't be looking to sell right now because you need to go ahead and just let it do its thing and then look for the turnaround.
My trade. So this is a trade that I took last week. When we came in, this is the nice thing about trading futures is on Monday night because we're going to open Tuesday morning for opening bell. I put on a stacked long position on MES, which is a micro E-mini futures, and this is on the S&P. So I bought a put, and that went from a debit of like, I'm trying to think what it cost me. It was like $1,000 risk, and I closed out for about $1,400 to $1,500 profit in 2 days. I'm good with that. It's like it was a hedge, and right now I think that the smart thing for me to do is we get a pullback. I'll probably protect more positions, and we might have another downturn. So I'll probably put on some hedges in MES and another one in MNQ. And if we come back and retest this low or hit that 200 EMA, that's another run to the downside that I can see some good short-term trading. And then down here, I will be doing long calls, credit spreads, debit spreads, whatever I can get my hands on. I'm going to do a lot of income plays around these levels.
You could all honestly, like on an MES, if you invest $50 in the position, that's you could just buy it outright. It's $50 for the MES.
Correct.
And you make $1.25 a tick, and then if you go ES, it's $12.50 a tick, and that's a quarter move.
Yeah, but just make sure you give yourself enough time.
Yep,
that's all.
Time,
so for me,
and make sure that you understand what the carry margin is for your broker. That's a big thing. For sure. Yep. A couple of things that I would like to get into if we still have the time, really quick. Chris, you can bring up the charts here. So, couple of different big points of news that I want to call out for next week. Tomorrow, Apple has an announcement for their new phone, et cetera, et cetera, et cetera.
Okay.
Historically, 99.9% of the time, Apple drops the day they release a new phone because their new phone doesn't make you fly, doesn't cure cancer, and that won't take you to the Mars yet. And so, I think it's just more of the same. I will say, there's a little bit of a drop there. You probably see, maybe 0.5% or something, nothing crazy, maybe a $10 drop out of Apple, $5-10. But one of the things that just came into FactSet, 2 minutes ago, is Apple is going to be using ARM, ARM is their ticker symbol, for the AI chips for their new iPhone. So the pass-through trade is not buying Apple, but maybe to buy ARM. So if we look at ARM Holdings, they're at $117. They've been in kind of a down market, right? For the last little bit. So if you think about that, they have a lot of future volatility and future growth based on this confirmed thing, because it will not hit FactSet unless it's been thoroughly vetted. So that may be an opportunity to buy maybe a leap, maybe a 6-month call option on it for $117, or just pick up a few shares.
Yeah, I like. If we come back down to this like $80 to $100 level, I just did a quick fundamental scan. It's like, I don't love this. Current price 117, fair market value with discounted cash flow is 57. The PE ratio is like 290. It's ridiculous. None of this really matters in tech, though. Honestly, tech can be. Look at Nvidia. My God.
This is another AI play. Then when you get look at what Apple did for Samsung when they were using Samsung chips, right?
Right.
They created their own competitor because they were giving them the chip manufacturing. So, and I think Apple with ARM going with them versus an Nvidia, which hasn't been able to deliver, and various other things. This is another thing about Nvidia. Okay, this is not a majorly known thing, and it's through my own personal research that I've done. Nvidia. So they are the majority of their profit comes from 35 companies that have purchased Nvidia chips, and they've purchased those in collateral financing through Nvidia. So Nvidia writes the loan, and they collateralize the company is offering collateral for the loan. The collateral is the chips. So when I started thinking about this, and I was talking with a friend, she's an amazing accountant. She's taken 15 different companies public, and then reverse that for some companies as well. She's brilliant with accounting. I asked her about it, and she said, well, quite honestly, what are they going to go after? It's not like they can go and just pull chips out of servers that are secured somewhere. So if the company defaults in a loan, Nvidia's on the hook, and their profits go way down. So, is it a house of cards situation? I don't know. But I think I'm looking for a continuation of a pullback in Nvidia. And Jensen Huang has a history of this in his past of doing collateralized debt on the actual
goods they're providing.
Item
Yeah.
good itself. So it ends up, and it's always failed. So I just hope, obviously, for market's sake, that this doesn't fail because it's 5% of the market. And then a couple other small things. BlackRock is going to be buying a global infrastructure partners team. They're private equity and private capital, so they're going to get bigger and bigger and bigger. Just look for that. They are the Berkshire of today. And the last two, well, there's three new index changes are happening.
In the S&P, right?
Dell and Erie are going to be added to the S&P 500. I don't know exactly what's coming out, but Palantir, Erie, and Dell. Palantir is one of my favorites out of the group. They are data security. I bought them at IPO. I rode them up. I sold it, made some money, and then I bought it back when it was $8-9, and I just continue to hold it. But when they are a massive data security company, and they are the best in industry. They have all sorts of government contracts for data security. They have all sorts of different technologies that are patenting. I really like their hold on one second. I like their value from they don't pay dividends, but from a free cash flow model, they are a great company. And they have plenty of cash and a lot of runway. And I don't know about Dell being in the S&P 500. I don't get that one unless they're
Dell, Intel, like I don't know, man. The legacy tech stuff, like Oracle has earnings this week, and I'm like, those companies are just not the same anymore. They're not as. I think they're too big. Like Dell's, I don't know. I mean, when's the last time you've seen a Dell commercial?
Right.
It's like, what was this, Gateway Computers again?
Exactly, the cow boxes rolling through. Intel is
I had a good run in Intel, but it is garbage, dude. Like, I don't want to look at the stock and think this to me is like when you have had all of the environment to say we can just do anything with AI, and I bought it. Like, I was down here at these good levels. I was at $26, $27. I wrote it up to this structure at 44. I got out, and I'm glad that I did. And even this like level down here, I mean, it's like there's levels here that I'm like, why is Intel so crappy? Like, this stock price is back to 08 levels and 02 levels. They're clearly doing something wrong if they can't find a way to stay in this like tech space, AI space, and I just don't think they're getting the same love. So to me, it's not a value play.
In 2020,
they cut dividends too, James.
Early 2021, their CEO on their earnings call literally said, "Hey, look, we are 3 to 4 years behind NVIDIA and AMD. They are taking market share, but we're only investing in development of chips, and we will catch them." What I think, what I can see is that Intel may be one of those darling gems that has another small run up and runs up, fills the gap, gets back into the $40-50 range. They're never going to be as big as they were because AMD can, until AMD fails. But Intel's one of those. And the thing I love that they're doing, they're restructuring the company just like GE did, right? And if GE, they've spun off different businesses. They have their core focus. Intel is going to be Intel again, and their core, they got away from their core focus, and they're now going back to it, just like GE did. And GE has, done nothing but come back as a stock after they did that split of their company from finance to banking to all sorts of stuff. GE just got away from it. They just wanted to be everything, and you can't. And so I think Intel will, they have development, they have future development. They are testing with chips that are faster than the Blackwell 2 that's coming out. And it's just a very, very interesting opportunity. And then lastly, Tesla. So I talked about Tesla and their chips, right? Their chip manufacturing are XAI. And those are the chips that Elon has created. and he has not been sharing the revenue that they're generating. So it'll be interesting once that's not a line item yet on the cash flow models, but once that breaks, I think it will. There'll be a nice pop in Tesla again. And then I also think, I hate to say this, but Boeing's ineptness with the space shuttle and all of that, and SpaceX going to save these astronauts up there and bringing them back to Earth anytime this week, it could happen. I'm thinking FAA. They just cleared them and they're good to go to launch. So if we get a bit of no rain here, where he can get a clear launch without the winds that we've been having here, I think they'll get a small, just Elon Musk bump from that. Yeah. I do see those key support levels in that. So supply demand levels, price levels, whatever you want to call it. But I've seen that as well, and I'm thinking Boeing still has some falling to do.
Yeah, for sure.
It still does until they bounce. But Boeing's one of those companies that if you're in it and it's been part of your portfolio forever, now's not the time to get out of it. It means too much to too many people, because Boeing is, I think it's something like over 80 countries manufacture for Boeing. So Japan, Korea, India, China, America, Switzerland, Great Britain, France, Germany. There's a lot of it's an underpriced company for sure. Dividend discount models show that. There it is. Perfect. Yeah. See, I do that in 10 spreadsheets, but hey, it's
at a 1.3 multiple, dude. It's like, it is dirt cheap. And again, I like the levels here. I did take some credit spreads this last year, right around this test of the COVID low. That worked out pretty nicely. I'm kind of happy to see it flaking back in here. Obviously, they couldn't catch any good press. I mean, their freaking planes are falling apart, or they're getting sued. But I mean, structure-wise, it is too big in the space to be like, who's going to replace Boeing?
Yep.
Nobody.
Exactly.
And I know airlines are cyclical, but it's like, as far as the infrastructure goes, Boeing's a big part of that. And Lockheed Martin, on the other hand, Lockheed is just been ripping to the upside. I mean, I don't want to buy Lockheed Martin right now. Nope. Like, I know, in the defensive space, but it's like, this thing is up to, I would rather buy Boeing and have a chance to have something left in it for, a 20, 30, 40% rebound, versus like, my least favorite thing is when you can't forecast all-time highs and you can't measure moves to all-time highs. Yeah. It's my least favorite thing to do, is to buy these freaking bullets. These bullets to the upside, I have no idea how to buy those. I just don't. If you're running with them, it's trailing stop losses and it's locking in some profit, but it's never, I'm going to buy this. Like, indexes are different, because index, it's, momentum begets momentum. And we, if you miss out on trading all-time highs in the S&P, you freaking miss out on a ton. But point is, like, individual stocks, when they move like this and they're crazy inefficient, I'd like it just to see it, come back into some type of structure where, we come back down here base, and then we find a way to go higher, and that's a trade to me, versus this crap of the highs.
Yep, 100% agree with that.
Yep,
but
good stuff, man.
That's all I kind of have from.
That's great, guys. That's great.
Yeah.
So the goal right here, for our community, is really just to look at this and just test us, just test our knowledge, see if we're consistent. There's a lot of opportunity for us, and I'm glad that we were able to get to a micro level, name some things. I love what you said about Apple and the ARM and all the rest of that. That's giving people some, real things to think about in terms of their trading and what they want to do. And then hopefully they'll contact us with even more questions. We're here for that, guys. So thank you. I will talk to each of you guys tomorrow. And you guys, you headed in because you got to get up at 4 a.m, don't you, James?
Always.
7
days a week.
Always.
Somebody's got to bring the sun up. You know what I mean?
Well, don't kick any cans when you get up.
Absolutely.
Wake everybody else up. Guys, excellent job. I will talk with you guys shortly.
All
right. Thanks, guys.
Yep. Listen, if you're not quite sure of what to do, don't do nothing. So do something and grow your account, grow your opportunities, and review this video so that you guys can either analyze whether or not you missed it and see how right we are, or to analyze and then jump in before it's too late with this particular week's opportunities. So stay tuned for next week. It's going to be amazing. Again, you all can, if you guys are interested in employees, our employees are the Core 4 bot, as well as the Kong bot, as well as if you're going to do something on the decentralized market, you can go with Yield Farm. And then we also have a case study. We have 2 case studies. We have one opportunity that we've been talking about, and I don't want to represent. We still are working with the Coinbase Trader, and it's still working out very, very well. But what I wanted to mention is we are doing Get Fit mining, and that's really an interesting idea to basically be able to mine activity as opposed to proof of work, like you would get with Bitcoin. And then, look at the utility of the fact that what you're doing in the space is actually making you money. And this is a great time to be a part of it and to see how it goes. So if it's interesting to you, we'll be talking more about it. And then just give us a contact and we'll share everything we possibly know. And then also, if you guys are following Miracle Cash and more, just jump in, just do a little bit more research. And we're here to answer any questions with that. So anyway, without further ado, I love you whether you like it or not. You guys be great, and we'll talk soon. Bye-bye.